Okay, I make it 9 o'clock, Trevor. I think we can get started. Ready?
I am.
As ever. Hello, everyone, and welcome to another technical analysis with Trevor Neil. Thank you very much for joining us. This is a webinar, by the way. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, please don't be shy. You can ask them in the questions tab of the control panel and go to webinar. And I'll pass those on to Trevor because he won't be able to check them himself. We'd like to remind you this webinar will be posted to our YouTube channel in a couple of hours' time. So if you'd like to watch it again, you can do so there. And we'd love it if you'd also subscribe to our channel and click on the bell to get notified. The webinar handouts can be downloaded from the handouts tab of the GoToWebinar control panel. If you're having any problems finding or downloading them, just let me know and I'll help you out. The first is a guide to the different indicators that Trevor's talking about whilst he's conducting the webinar. And the second is a CFD guide, which explains the different products that we offer at FX Choice. If you're watching on YouTube, these handouts are available in the description box below. So as always, well, Trevor's, if you don't know him, he's over 40 years experience as a technical analyst and trader. He was global head of technical analysis at Bloomberg. So we're in safe hands, I think, today. So Trevor, take it away. It's all yours.
Okay. Thanks, Dan. Thanks, everybody, for joining us again today. I'd like to start actually by looking at those relative rotation graphs, which over the last few weeks I've been explaining before we get launch into the currencies, then into the cryptocurrencies, and then into commodities, and then into stocks. But just to get a big picture here, very, very briefly, this is the G10 currencies versus the US dollar. The dollar is in the middle here. Things that are furthest to the right are strongest. So furthest to the right here is the Canadian dollar. Weakest is the Swiss franc. So we can see this very, very clearly in this picture. The vertical axis is the positive momentum of the currency pair. Now, what you can see is that they're all moving in a southwesterly direction. That means they're going lower in the y-axis and further to the left in the x-axis. So that means they're weakening, going west, and south means that with lower momentum. So this is the dollar strengthening against against all the other currencies, or the currencies weakening against the dollar. So best ones to be in are the Canadian dollar and the British pound, the yen and the Swiss franc are the worst ones. The euro is here. Now moving to the euro itself. Can you see the euro, Dan? Just want to make sure.
Yes, we can. Euro USD weekly.
Okay. So here's the weekly chart. Here's the fall that we had in the euros as the dollar rose, and we came back to this consolidation point here. So when we were coming back, it was a level that we thought the market would find support. We had expected that it would do this as a result of this bearish, very important bearish divergence in the RSI on the weekly chart. But in the shorter term, here now, what we did was I had measured, and some of you have been on these calls before, A, B, C, added or subtracted AB from C to give me D. D was 118.42, and staggeringly the low was 118.34. So that was the minimum price objective. That's my shorthand for that 100% level. So 100% of this move here, pulled back to here and projected from here. Many people, myself included, has also drawn that in as a flag. The break was very clear, particularly with the expansion of the Bollinger Bands. So now we've bounced hard, and we've bounced up to really the first area of resistance, and it seems to be weakening at that point. And so I do think that the trend down in the euro is reasserting itself now, and we will drift further and eventually take out that 118.42 low. But don't forget that we're punching into a big area of support here, a very big cigar, a Monte Cristo #1 of a cigar of support in here. So that'll be hard for it to punch through that. We spent a long time, 2 quarters, 6 months trading in that range. And so a lot of buying and selling in there. So that will be a big area of support. But we do look as though we're moving in to challenge it. Now, sterling, remember its position on the RRG. Here's the weekly chart of sterling. We broke this very, very important resistance level here, 133, burst away from that predictably, and we're pushing ahead strongly. We've eased back a bit, but the MACD, this is the weekly MACD, is still positive. The RSI is still steady, so the uptrend is still intact for the sterling. Now, last week sterling started to rally, I think, again, resume its overall uptrend. We've completed this sell-off here. I'm a swing trader, so that's why I've circled this bit here, because it went down and turned up the RSI here, exactly where we predicted it might do when it met this cigar here, this consolidation area here, and it retraced. Just do the retracement here, and it retraced 61.8 to here, so it held that Fibonacci level. It looked as though it was holding here, I must be honest, but then it lurched down to the next level, which was here, and now it's on its way up again, I believe. And I'll be doing this now. I'm going to do projection because I think we've completed a pullback swing and we're ready to move ahead again. And so I'm going to measure from here to here. So that's my AB. This is my BC here. So I now add AB to BC to C, I should say, and that gives me a level of 144.50 up here. So I think that this swing will take out this high, which I don't think is a strong resistance. We're formed very briefly, and I think the next swing should take us up to 144.53. The next one I'd like to look at is sterling versus the euro. And this is really, remember how sterling was over on the right on the RRG chart and the euro was on the left, not furthest to the left, but it was on the left. Here is the weekly. That's not. I nearly got tricked there. Okay, so this is the move that we're in here now, very powerful move. I think on our way in the long term up to tackle this double top right up here, that very significant resistance here. So this is sterling versus the euro on the weekly chart. So that's the context. So we are strong. Don't know why that has done that. And so here we are moving up. And we're having very weak pullbacks whenever we do get them here. I never got this, the swing didn't even come below 50% on the RSI on this one here. So I missed that chance to rebuy at that point. But it's looking good. Again, the ADX is strong because the trend is very strong. The RSI is high, yes, but it's still pointing upwards. We did get I call it a sell signal, but I wouldn't take a sell signal in such a strong trend. The MACD is fine. It's going to cross over up again. So I think this is one of the great trades. We've got a small amount of resistance at the spike highs at 117. There, the support at 116. But I think where we should get to the 117. 50 level, which is a Fibonacci 100% move of this A, B, C move there, and I think that we're headed up to that big double top. Now let's look at Canadian dollar. So that was the one over on the right. there, the best one, if you like, to outperform the dollar itself. And here it is breaking down on the daily chart. Again, let's always remind ourselves of the context of the weekly. It's in a strong downtrend. There was a bullish divergence, but now that line, however you draw it, has been broken. I think I'm going to redraw it a little bit here, but however you draw it, it has been broken. The MACD, the weekly MACD, has crossed again. I want to just show you where we pick up resistance on this. So here we are now testing, we've broken this low here. So the next low to test is the 2018 low, that's at 122.46, and support is very weak there. And so I think that that'll probably go give way eventually, a long time, talking months away, and we head down and retest that 121 level. So this is, if you like, the best place to be if you want to go against, to exploit the weak dollar. So on the daily chart, at this very moment, we're breaking down to a new low, starting the week doing that. The RSI came up, and within the context of the downtrend, it rallied enough to give me a swing and to give me a new opportunity on the short side here for it. And I'm not surprised to see this low give way, and I think we'll swing lower. The way I will do it is I will measure from here, A, B, C, and I think this swing will extend to 123.23 when we break this low here properly. And then the other one I want to just look at is New Zealand dollar, Japanese yen. I've liked this a lot for a long time. The weekly picture here is, yeah. Excuse me, I'm in trouble here. So here's the New Zealand dollar, Japanese yen. New Zealand dollar strengthening against the yen. The yen, was right over on the left-hand side on that RRG chart, relative rotation graph. Very, very strong here, pushing ahead strongly in the RSI, MACD, rampantly positive. Testing this high here from 2018, but I don't think that's going to present a great deal of resistance there. On the daily chart, we pulled back. It didn't pull back enough for me to get that swing opportunity, unfortunately. Anyway, it's on its way back up again. I don't think this high will present much of a challenge to it. It pulled back 38.2, regained its footing, and it's on its way up again. And I think this has got much further to go. Okay, moving now to Bitcoin. And for this, I want to again use my RRG chart here to look at the currencies, the cryptocurrencies versus the dollar. So the dollar is in the middle here, and we've got I don't know why I've got ADA on there. I didn't mean to do that, but in general of the big ones, Ripple, Ethereum, Litecoin, and Bitcoin, we are moving northeast, aren't we? Northeast. So what is that? What is northeast direction? That is moving, strengthening relative to the US dollar with positive momentum. So getting outperformance through cryptocurrencies over the US dollar itself, which we would expect. And furthest to the right is Bitcoin itself. So let's look at Bitcoin. Okay, so on Saturday, Bitcoin burst to new highs. Powerful bar over the weekend, probably a thin trade at the weekend. Not so sure about that. I think it does trade very actively at the weekend. If it was a regular market where all the funds and professionals, of course, are having their weekend off, then you'd say it was thin trade. But I think that the participants in this market don't take the weekend off. So Sunday we were down. Today we're a bit weak as well, and that's given me a sell. Not that I'm going to go short of this because the trend is too strong here. I would only do that if I had other reasons to go short. I think this has got much further to go, as you know, and I'm very, very bullish of it. The trend is very, very strong. We do have a little bit of bearish divergence in here. That's between those two highs there, which is a bit of a worry, which may mean that we might develop into more of a consolidation. But at this moment, I'm expecting the previous high at 1280-ish area to stop this fall. If it doesn't, then I'll be looking at the Fibonacci levels in here. This isn't strong support, I've got to say. You know, it wasn't strong resistance, but it could be enough to support us there. I'd like the RSI to come down below 50 to give me the swing opportunity there, but I did get this one here where the RSI came down right below my lower level here. So this was a beautiful one in here. I think we're actually in the process of swinging up despite what's happening today. There it's just consolidating the break to new highs, and so all these pullbacks to me are opportunities. Going now on to gold. What a disappointment gold has been to many people, but we've had we had a bit of a rally last week. I mean, it was a rally last week. Let's just get the weekly view on here. So we've tumbled really into, I'm going to award this a small cigar here, there, and we tumbled into that and that high there, acting as support. It got very, very deeply oversold on the weekly chart here, and it's now turned up, although it hasn't moved up enough to trigger through my lower line. The MACD, which is quite lagging, is still negative. So for me, I'm looking for sell opportunities in it. So what it's moved up to 48. It has to go above 50 and turn down again for me to see this as a swing shorting opportunity. But I do think it will. Hopefully it will get high enough before it turns down. There is lots of resistance. 1760 is this line here, and I'm wondering whether it will manage even to get up to that level there. It's a very weak market. So I'm going to move on now to, yes.
Trevor, can I interrupt you? Sorry, I'm just checking your notes. It seems that you wanted to talk about Ethereum. Did you miss it?
I did miss it. Good point. Okay, Ethereum.
Sorry, I'm just checking that you.
Yeah, thanks for giving me the nudge. Just going back to Bitcoin, because I wanted to contrast Bitcoin with Ethereum. Bitcoin on Saturday, we made the break to new high. In Ethereum, we have not. And so we've made two highs at pretty well the same level if you exclude that spike there. So this is a bit more, this is a more threatening chart here. The RSI has given these sell signals, but again, I'm not selling because the uptrend is too strong. There, I would be looking for corrections like this one as opportunities to go in the direction of the longer term trend. But contrast the fact that this didn't manage to make new highs, whereas Bitcoin did. So this is a weaker chart. So strength is actually in the Bitcoin. But we saw that on the RRG chart with the Bitcoin furthest to the right. So yeah, it's a weaker looking chart here. So if you were choosing one or the other, then I would at this moment, my favorite would be Bitcoin. Okay, thanks, Dan. And by the way, if you've got any questions, please send them to Dan in the chat box, and he will interrupt me, and I'll be pleased to answer any questions you have about the charts. So Brent crude oil, let's look at the weekly chart here. I want to always remind you, I know this is a very long-term chart going back to 2016, but look at the significance of this level, which I'm going to call 70. It's a little bit above 70, but it's got various points. A high here, a low here. When we broke here, it was very impulsive, a consolidation here, a spike here, and now here. So this is a very, very multi-year significant resistance level. However, the technicals are very strong at this level. The MACD is very positive here, the RSI, yes, it's rampantly high and unsustainably high, you could say, but it isn't going down. It's still, momentum is increasing at this very point here at the high here. If it was going to stop, it should be here that it does stop. So what is it doing here? Well, we pushed up. We had a very short pullback of 2 days, and now we've steadied up. We haven't steadied up very strongly. I think that's that I've got to say is a little bit disappointing that we haven't pushed ahead more strongly. We've got a small divergence, bearish divergence, that high to that high to a lower high here, but we're still, you know, positive on the RSI. The MACD is positive, so I expect more consolidation around this level because of its significance. Big round number, multi-year high. It would be shocking if it just sailed through that there. So I think it can churn around a bit more, but the break of it will be very significant indeed. And I mean, it could fail here, and this could be the end of it, and the run is over, and this would be a good place for it to fail, as it has done 4 times previously at $70, or it breaks the $70 and will go to $100 or something like that. So we're at a really crucial point here. Now moving to the S&P, to the US 500. Let's remind ourselves of the weekly chart, you know, just to get the context here. We're moving up rampantly since that March low. We had another pullback after this bearish divergence, which was, you know, has really not fulfilled, you know, it's many technical analysts have been very worried about this because we've had this bearish divergence all through the last quarter of last year, and it's still powered ahead. So moving forward, we're on declining momentum, but it's still grinding forward. When it started to sell off here a couple of weeks ago, many people say, oh, this is it here, we're at long last, it started. But what's remarkable about it is we're testing the highs almost immediately. The brevity of the pullback is incredible, in fact. So here was the pullback here, enough for me to come down, and in the context of the strong bull market, this for me is a swing opportunity. The dip is a swing opportunity here, and we're flirting with the previous highs, and I think that this one will. So this was a wobble to do with the technology sector. Wobbled, but they've regained their strength on a relative rotation graph basis. If you have a look at that, you'll see that the tech sector has regained its composure, and the RSI is looking good again. The MACD has crossed, and I think we're on our way to new highs. Looking to the UK 100 now. Again, I'll just start briefly with the weekly chart. I think we're forming a triangle in here, and that's a symmetrical triangle. And so we could break out substantially either way from this one. I tend to think it will be up because we've got some good support here, but we've got the most mother of all cigars in here. It goes back to 2017, this consolidation. We literally spent years in the sort of 7,000 to 7,700 or 800 range there. We spent years in that range, nearly 3 years trading in that range, and that is just above us here. That was why when we broke down, it felt like, you know, so precipitously. I'm just trying to think of a way of saying that, and what it really looked like. It went plop, that's for sure, as it broke out of that big trading range. Well, now that will become resistance, and we're consolidating. The technicals are sort of mildly positive. We've come back below 50, and then we've moved up again in the RSI, and the MACD has turned positive again. So here is, this is that triangle here. Depends how you draw it here, but it, you know, arguably we are breaking to the upside on that triangle, and we're doing so with strength. The RSI is pointing upwards. So I know it's a high reading, but it's going up, not down, so it's gaining momentum. The MACD is positive here now. We've got minor resistance here, which I think will be cleared relatively easy. That's at 6,800. We've also got resistance here, but again, this was very brief, this resistance here, 6,900. So those 6,800, 6,900, I don't think will present a great deal of resistance. It's really that big cigar above us there that is likely to stop us. So I think we're going up to challenge that. Then I want to look
Trevor,
at
just got a question for you.
Yes, yes.
Trevor just got a question for you from Gregory. Thanks, Gregory, for your question. He asks, Trevor has mentioned his RSI trigger a few times. Does he have other triggers? Are crosses of moving averages an important occurrence to consider, or basically can the MA cross be a viable trigger?
No, I don't use the MA cross at all because, you know, I'm a, this is, you know, swing trading is buying, let's say, an established trend, buying the dips. And so if we go back to, let's say, where we've got a clearer established trend, which is the US 500. Now here, I take the message of the trend. This is the context for me off the weekly chart. We're in an uptrend here. And then off the daily chart, I look at the ADX to tell me how strong the trend is. Now, actually, in the case of the US 500, this isn't a particularly strong trend and doesn't meet my criteria. But within the context of the rising market, let's say it was market was rising strongly. When we get a dip like this, for me, the trigger, the setup for the buy is coming up through 35 from below or up through 50 from below, whichever happens first. That's my trigger. So let me get a better example of it. So let's take this one here. This is one I did do. So here on the weekly chart, MACD, of course, very, very strong here. On the daily chart, the ADX is above the trend is strong. So the trend is strong and it's up, and it was back here. The RSI came down below 50. It didn't turn up, but it then came down below 35 and turned up. Turning up is the setup for the buy trade. The buy trade itself is not simply because we've gone down, because this could be the top on the market and we could keep on going down, and we need to flick back up. And for me, the trigger is the break of the 2-bar high. So here we were down, we'd come down anywhere below 50 was okay to buy if it turned up, but here it went below 35, and at this point here it was below 35. Then on this big candle here, it broke the 2-bar high, this bar and this bar. So my stop to buy was here. And then that gave me a very obvious place to place a protective stop, which is at the swing low there. And then I trail, I don't mind sharing with you, with a trailing 5-bar low stop, which has yet to be hit, even though we've come down sharply here. 1, 2, 3, 4, 5. That's where my stop would be currently. I want to survive moves like this. If this regains its footing, which I think it will, hope it will, is then I don't want to be stopped out. You know, I'm here for a longer run. I want to sit through 1 or 2 of the zags. They're inevitable on your journey up in the big zig, which is this one here, I think. So I might be stopped out, but you know, I'm sanguine about that. There's always another day. But you know, that won't be so bad. Here would be the stop out level, and here would be the entry level here on that swing. Okay, so the RSI is the setup. It's not the trigger. And I don't use, the reason I don't use the moving averages is because they lag. By the time you get down to the setup, you need a very, very timely signal, not a lagging signal. Lagging signal gives you confidence. The moving averages here, 50 is above the 200, that tells me we're going up, but it's not going to give me the timing I need. All right, sorry, that's a good question.
Well,
and
Gregory says thank you. For
who was it that asked the question?
Gregory Amos.
Gregory, thank you, Gregory. Good, very good question. Thank you very much. So I was coming. I wanted to talk
we're
about
going
the
on
German.
to German. We're going into German, yeah.
Yes, thank you. So again, quick glance at the weekly. You see, you know what I'm doing here now. I'm always looking at the weekly trend. The MACD is positive on the weekly basis. I'm going to take away that divergence now. The RSI is strong and going up on a weekly basis, and we're at new highs here. And you know, this is a very big, important break here. So we powered ahead strongly last week as we took out these minor tops here. The RSI is positive. The MACD is also positive. The ADX is very low in this, as a matter of fact. But the last trigger buy was coming down below 50 here and here. But you know now that it's not the going below 50, it's the breaking up through the 2-bar high that gives me the buy signal itself. And I didn't buy this one, unfortunately, because this ADX is not high enough, but I wish I had. But here's the one that I do like very much, and I just keep coming back to it. It's the Japan 225. For goes to the weekly one here, I want to go to this enormous chart here, back here, and I want to go back actually about 30 years to show you what's happening here. So here's what we're doing here. This is a massive move. We're approaching some resistance here, but the resistance is light. The all-time high, we turned on a dime. You won't remember this, but I do remember this. It was only there for a moment and it collapsed after this rampant move up here. I think we're surging towards that there now, and we're doing it in a very determined way, I would say. So I'm going to the daily chart here. Now we've of course we've got weekly. MACD is very strong, and the RSI was good enough to come down below 50 for me here in here. Now you can probably work out for yourself, where did we break the 2-bar high? We didn't break it here, we broke it here. That was the trigger, and then that's the low. The 5-bar low is the first protective level for this trade, and it will trail. Now we're today here, 1, 2, 3, 4, 5. The stop has moved from here to here. There, the lowest low of the last 5 bars. All right, my friends, I've come to the end for the moment and for today. And do we have any more questions?
No, that's it, Trevor. Thank you very much. We just had the one today. Thanks very much. Yeah, that was very informative as always, Trevor.
Okay. Oh dear. I'm getting more worried now.
No, it's fine. Thank you very much. So yeah, well, thank you very much for attending, everyone. Please join us again next week, same time, same place as always. And don't forget that we'll be posting this webinar to our YouTube channel in an hour or so. So if you came late and you want to watch the beginning, or if you just like to watch the whole thing again, or if there's a particular part you'd like to watch again, please head over to our channel and don't forget to subscribe, whilst you're there, and click on the bell to get notified. Anything else, Trevor?
No, that's fine. Thanks very much. If you want to look at those RRG relative rotation graphs that I was showing you there, you can look, if you go relativerotationgraphs.com. I know it's a really long, plenty of opportunities for spelling mistakes in there. But you should bookmark it and then register, which is free, and then go to RRG online on the top tab there, and then you have a series of samples of RRGs. But the great thing about those is that they're not known about, but they're used a lot in the institutional environment. They're on Bloomberg, they're on Icon, and people very popular functions on there, because people they move their money where it will work best for them. And they want to see that, what's best, what's worse, all those sort of things. And that's how you can set that up. Okay, my friends, thank you very much indeed.
Trevor.
Have a great
Thank you.
week. Thanks, Dan, very much. And may the trend be with you.
Thanks, Trevor. Bye-bye, everyone.
Bye-bye.